We appreciate you listening and maybe participating in Invest Talk, and more of our new podcast listeners are calling in with their questions and stock ideas. That's why we're here. And if you can think of us as a sounding board and we can place some information in your hands, we'll feel satisfied. We want you to feel comfortable, too, asking your questions here. You can do that two ways. Use your phone. Call our anytime line, 888-99-CHART. That's 888-992-4278, or go to investtalk.com. That's InvestTalk with two T's, investtalk.com, and click on Contact Us. And thanks again for listening to Invest Talk. Welcome to our 1-hour meeting of the minds about money, your money. This is Invest Talk, made possible today and every day by KPP Financial. It's about managing risk while looking for profits, putting the money you worked for to work for you. And now, here's registered investment advisor Steve Peasley.
Welcome to Invest Talk, everybody. This is the Friday edition, February 27th. On AM 860, podcasting, and investtalk.com. We appreciate you being here. Today I have with me Helen Crawford helping me out. Thank you, Helen.
Hi, Steve. It's good to be here.
And as you know, she is a registered investment advisor with KPP Financial. And we're here to try to help you make better decisions about your retirement portfolio, about your financial life. That's what the goal is, to help you, if we can, to help you. Now, we're in a more defensive mode. I think I would like to be a little bit more defensive. We think, just so you know what we think, and you heard Jerry yesterday, but we think we're probably going to get we have an oversold situation. We will probably get a rally. It'll probably be a short one. No one's expecting anything great from it, but it's a rally that we want to use to get more conservative.
And everybody's waiting out there, Steve, with bated breath for this rally to come.
I know. And frankly, the market today, we'll talk about that a little bit, but there was a lot of bad news out in the market, and I think the market acted pretty well for all the bad news.
Yeah, it held up well, I think.
Yeah. Now, the end of the day, for those who came home, in the day it was down 119 points, but that's not telling the whole story. It was actually up three times during the day before giving up in the last half hour or so. And I don't think it's probably because we're going into the weekend this time. People don't want to hold on to stocks over the weekend these days. Now, again, our promise is to help you make better decisions. Well, that's what we're going to try to do. Now, we're being extra cautious at this time, and whatever we're doing in the market, we're being extra cautious, and we're suggesting that you need to be extra cautious. There are opportunities, okay, and it's a painful time, I know that, but there is always, from a bear market collapse like we've seen, there has always been, in a recession, there has always been a huge bull market to follow. The trick is we don't know when that starts. Okay, we don't know. It starts long before the economy turns around, but we still don't know when that's going to be. That's all a guesswork. We just don't know. So we're here to answer your questions, to give you maybe some perspective. Okay. It's a very tough market. We know that. Helen and I, Jerry, Jason and Justin, we all struggle with this every day as to what should we do. Should we have more cash? And we have quite a bit of cash on the sidelines, and we have a number of issues that are kind of anti-market. And the things that we do have are very solid, high dividend, a lot of high dividend payers, but maybe we should be more conservative.
That's it. I think, Steve, it's a time of protecting what assets you do have on your books and being ready to change if, maybe we're wrong.
Yeah, there will be a change. Trust me in this. There's going to be a change. We just don't see the catalyst yet. Obama was supposed to be a catalyst of at least a short-term rally, and he has been the new president has been with all the money they're spending, has been very disappointing.
I know. Just before Christmas, Steve, did you notice everybody was buying stocks, thinking what was going to benefit from the changing government?
Even we were.
For sure.
So, okay, let's get over here. This is going to help because he's going to spend a ton of money.
But now we're having to Obama-proof our portfolios.
Yeah, now we've got to take the opposite position. Because it's not, he started ever since he took the oath of office. Everybody, just so you know, the market has gone down, and they don't like now his came out with his new budget plan, mm-hmm. and nobody in the market likes any part of it because first words out of their mouth, taxes are going to increase.
It sounds like their little wish list that they've been saving up.
Well, I'll tell you what, when you start taxing, when you start saying you're going to increase taxes in the middle of an economic slump, the stock market's not going to like it.
And the thing is it's a huge change all across the board, isn't it, Steve? Spending.
Yep. What happened to balancing a budget, by the way? Mm-hmm. I mean, no, the Republicans didn't do it, and they're supposed to be the ones who are supposed to be doing it. And the Democrats, you talk about a budget that's totally out of control, and the stock market is reacting to that. It does not like what it sees. Does not. Of course, Citigroup today, that was news that was out also today. We'll talk about that a little bit later. But I frankly thought that was good news, but the market didn't care for it. Or, certainly the stocks of Citigroup didn't care for it. And I can understand that. It got very diluted. But I would think that it was a good news, and I'll explain that afterwards. Now, but we want to talk about what you want to talk about, not what we want to talk about. Okay, we're also going to talk about our conference that's coming up in Los Angeles area on March 21st. Okay, we have first one in the LA area this year, March 21st, and we're not going to have too many of these, everybody. So if you want to come to the conference, this is the one you need to set up. Make sure you come. And the title of the conference is going to be Thinking Outside the Stocks. You don't always have to own stocks of companies to be invested. You don't have to. There's other ways to take advantage, and we have to think about that. And we're going to talk about it in detail. Well, what else we do? What is going to be the result of all this spending? And how can we take advantage of that? It's one thing to know the result of something, but there's another thing, well, how do I take advantage of that? What do I invest my money in to take advantage of it? That's what we're going to talk about.
That's right. It's making sense of this market meltdown that we've been having.
Yep. Now, that's going to begin March 21st. March 21st. Time to make your call, questions, comments, anything you want to talk about money, 888-99-CHART. That's 888-992-4278. And so that's what's going on. It's going on with the market. Have you noticed that interest rates have been creeping up very slowly? Mortgage rates have been creeping up slowly. That's not good for the housing. Not good for the housing. We had a lot of housing numbers out this month, and most people are pretty negative on it. And they weren't positive, but there's a little bit of bright spots in there. It's time for you to get your phone going. We have opened the lines. You can all call right now. The number is 888-99-CHART, 888-992-4278.
You're listening to Invest Talk with registered investment advisor Steve Peasley. Steve's here for you today, and if you'd like a copy of Steve's special report, Supercharging Your Portfolio, just say so. Call 888-99-CHART and tell us, leave your email, and we'll send it right out to you.
888-99-CHART, 888-992-4278. As you know, you can call anytime you want. That same number is open 24 hours a day, 7 days a week, and you can call and ask any question anytime. Here's a call from David in Los Angeles.
Hi, I have a question. I just heard you talk about a PE range that you look at for a company, a 5-year range that it's traded between two values. But where do you find that? Is that something that can be found on some...